the income investing thing is really an ethos that he's developed, an approach that he built out. And I think it's cool. Like, I classically trained in finance, right? I went to Wharton. I took the investment management classes. And what happens with our clients is really, really interesting, because what the book says about how you should think about personal finance is based on like a version of a person that doesn't really exist.
Hello, everyone. I'm David Cooney, your host of the In the Booth podcast, a podcast about the people, places, and things in and around Mifflinburg, Pennsylvania. Joining me today from Buffalo Valley Wealth Plus are Lance Miller and Lou Montesinos. Lance and Lou, it's great to have you in the booth. Awesome. And you're in the booth.
Wonderful. Thanks, Dave.
You're welcome. Welcome aboard. So let's go from. I can hear everything now. So let's go from square one. So Buffalo Valley Wealth Plus. So you both are part of this organization, obviously.
Sure.
So one of you owns it. Somebody owns it.
All of us.
We own it as a group.
They're partners, yeah.
Yes.
Okay, so talk to me about who are your partners.
So it's just us and Dad, Mike Miller.
Okay, so Mike had started this before you, or?
Yeah, that's a
good question.
That is a great question. So he was helping folks, and it wasn't a business, right? He had a group of friends and folks that had known him through the prison or his own personal financial
Or he was an
advice.
employee.
Yes, exactly.
Okay, I just want to make that clear.
Standard. So he was teaching basically financial literacy classes to the inmates there as part of the education team.
Oh, okay.
And through that work, folks had gotten to know him, and he had started helping people. And I basically said, when he had retired, I was like, Dad, if you want to help more folks, the best way to do this is hang a shingle. Like, let's actually start this business.
And he was receptive to that, or he was like, I don't know.
I mean, Dad, is your dad receptive to every off-the-wall idea? No, of course not in the beginning.
Not my off-the-wall ideas. Are you kidding me?
I'd say it took the better part of a decade before we got to a point where it was like, okay, let's do this. And we knew Lou and thought that could work.
Okay.
Right? And that process wasn't like 2013 to 2018 was when those conversations were happening. And then in 2019, we started getting pretty serious. And it was like, okay, what's required to do this?
Okay. So backtrack a little bit, I guess. Before we talk about bringing Lou on board, let's backtrack and talk about what you actually do and how you help people.
Oh, my goodness, sure. Yeah, so Buffalo Valley Wealth Plus as a business has sort of like 5 areas, I guess. There's financial coaching,
right?
Which is just broad, general financial advice. So you come with any question you have, and we try to help you.
Okay.
That's one of the services we offer. The second service we offer is just tax preparation.
Okay.
Right, so we do basic tax preparation. We don't hold ourselves out in the way that like a CPA would. Right?
So you're not doing depreciations and those sorts of things.
No,
okay.
not like
basic tax.
Basic tax stuff, right? And then the third piece is what we call income investing, which we'll probably have to talk about a little bit more to explain. But that's a service that's generally more focused on like retirement type situations where folks are starting to use the wealth that they've saved their whole lives.
Right.
And then I can let Lou talk about the last two.
The last two are insurance-based.
Okay.
So that's where they reached out to me to come on board.
Because your background was in insurance.
My background was insurance at the Shaw Agency over in Lewisburg.
Okay.
And those two are health insurance. So that's Penny, individual health insurance through Penny, and Medicare. And the last peg would be life insurance.
Okay. I see. See, I was unaware of that until I saw it on the back of the Mifflinburg sports schedule.
There you go.
I saw insurance and thought, that makes a little sense now.
Yeah. Yep.
Okay, so excellent. So then your dad, talk about when you first started, pre-Lou. So your dad, I knew him as a financial wizard because of the Mifflinburg Area Scholarship Trust Fund.
Okay.
And people are like, "Ah, man, it just keeps making money, and we keep giving this money to students." I'm like, "Really? Okay."
Yeah. So the application of the income investing strategy, that's what MACST uses.
Okay.
In some ways to generate cash to fund a good portion of the scholarships.
Right.
There's also the piece there where, like, you have a team of people that have built this awesome organization. It's not just Dad. Don't give
Right.
him all the credit, but
Just most of it. Yeah.
well, what no clue on that one, but there's a lot of folks involved and they're doing cool stuff.
Yeah.
But that is kind of where more people started to talk and present this idea to more folks. But yeah, prior to us becoming a registered investment advisor, nothing that Dad was doing was a business, right? It was just
Right.
helping folks.
Yeah.
And prior to forming this partnership and bringing Lou in, the last two buckets, right, all of the insurance pieces wasn't a part of what Dad was doing at all. The financial coaching a little bit, but it was almost entirely the income investing to generate cash for folks to live on that were on fixed income or generally older, and then thinking about taxes in a smart way
Right.
for those same folks.
Okay. So I'll kind of bounce around this list of 5 different things. That way you'll both be involved. And feel free, Ilya, even if we're not talking insurance, feel free to chime in because you see everything on a day-to-day basis.
Absolutely.
So this is pretty interesting for me, the whole coaching thing, because you say people come in and they have questions. Mm-hmm. So how do you do that as a business? If somebody comes in and says, "Oh, geez, I have questions. I don't know anything about anything." What do you say? Okay, let's sit down for X dollars an hour, or let's sit down for a certain percentage of them. I don't know. How do you work that?
Yeah, I'll jump on that one.
Okay.
So the financial coaching kind of stemmed from we just felt there wasn't a place to go to ask questions. Just simple
Have you ever
questions.
heard of the internet?
So yes, you can go through, you can go down some rabbit holes on the internet.
Yes, I would say.
To have a professional in your corner
Right.
was not something you could typically find, even on the internet. So we tried to make a service that was cheap enough, I guess, that would bring people in to ask those questions. To have a financial professional in their corner.
Right.
It's a service that we only charge $200 a year for. And that's essentially $200 to keep us on retainer to ask any questions you may have.
Okay. So I won't say it's a membership kind of thing, but here's $200.
Generally, yes.
Yeah. You can think of it
Yeah.
that way.
Now, have you been doing it long enough that you see people coming back the second year, or you haven't been doing it long
That's a
enough?
good question. Yeah. So how we framed that service is we would like to help people as much as possible for those first few years and teach them how to
Right.
do it on their own. Not necessarily keep them as a coaching client from the day they graduate college to the day they retire. It's more so to get them in the door and actually teach them how to do some of this stuff.
Right. In the hopes that they won't need you anymore because they're on the
Exactly.
right track, I guess,
Exactly.
financially.
Exactly. Yes.
Okay. So, obviously, without naming names, talk to me a little bit about like what you hear. I mean, you've had some strange, people have come in and probably surprised you with some things. I'll give you kind of with my background in biology and stuff, I've bumped into people. They're like, you know what I just found out? McDonald's food is not even good for you. Like, you think, how did you not know that? Yeah. So what has surprised you in terms of that? Like,
I have two.
Yeah, you can jump on that one.
So the biggest one that I think frequently comes up is, and it's not surprising, but the prevalence is the piece that I think is surprising, is that folks will generally have an emergency fund, which is a very common piece of financial advice. Like, you want to have some liquidity
Right.
if you have some disaster, your car breaks down, so you can keep your job, because you still have to go to your job every day if your car breaks down. Folks will have a very, what I'll call like sizable or oversized emergency fund whilst simultaneously holding credit card debt. We've seen that with maybe 10 to 15% of our coaching clients that have come in. And in that situation, that's a little unusual. Like I can kind of twist my head and figure out how that could make sense. But in your emergency fund, you're usually earning close to zero because it's a savings account or maybe some sort of like very liquid thing.
Right,
So
right,
you're
right.
not earning a lot of interest on it usually. And then on the credit card side, like
You're
that's
paying
the
15
worst,
to 30%
yeah, that's
or
like
something
the
on
worst
it.
debt you can have, right?
Yeah.
So when that situation comes up, it's kind of like, wow, something went wrong here. Like, how did this happen? Because very rarely, once you chat with that person and explain what's happening, do they say like, yeah, I want to keep doing that, right? Like usually they're really frustrated because they like got someone told them it was really important to have an emergency fund,
Right.
and then they were confused by how minimum payments worked on their credit card or whatever the case
Really?
was. And yeah, like value is just being destroyed every month. That continues to happen. So that one, the prevalence of that has been surprising. And then the second biggest thing that I did not personally anticipate when signing up for coaching was how much, like, I would just call it relationship finance there is, where you have like two people who live together. They may be married, they may not be
Right.
married, but the dynamics in play there can oftentimes be challenging and like sort of go beyond what a financial advisor might be well positioned to do into what like, you know, a counselor or some other space might be what's really kind of
You mean they
required.
might need legal advice to put things in
They might
writing?
need,
Or
so maybe legal, but oftentimes it's just, I don't know, like relationship dynamics that make what we might be trying to do with a budget or what we may be trying to do with optimizing their joint situation isn't really consistent with how those two people think about money together. And that's not something I anticipated.
so give me an example about that. So what I'm thinking of,
Yeah, I can be more direct, right? Like I'm kind of dancing around this.
like
here. It's not
someone comes
helpful.
to you and says, "Hey, we would like to do this," and
Yeah, so let's,
but the one partner is like, well, "No, I don't want to intermingle my money with."
yeah, exactly.
Okay.
Exactly, right? Like that's more common than I anticipated. And like married folks, and they could save money if they funded an IRA for one of the spouses, but the other person, like they're keeping their money separate, and that works for them. So the guidance that I'm giving them will require them to like kind of tilt their head a little bit differently than they have been, to say like, okay, if I do this, that makes both of us better together. And that might not be the way that they had been thinking about their situation prior. So that has happened.
Where does my mistress fit into this whole picture?
Yeah, it's not a line item that goes on the budget, Dave. But yeah, that has been more common than I thought. And I think for us, that's helped me just like recognize everyone's different. When folks have these situations, for us as a financial advisor or any kind of advisor, it's important, like, don't judge that situation. It's just different, and figure out how to make it work.
But here's a card for a counseling service.
Yeah. So yeah, we've talked about that, right? It like at some point maybe that becomes like the right step, in the same way that we would refer someone to a real estate agent or a tax professional or a lawyer. It's like, it seems like you all might have a disagreement about this, that we're not well positioned to help. Here are some other folks around that might be able to help you. So yeah, that happens.
I know a hitman, and he can get you out of this horrible
That is also-
situation.
man, that is also not a budget line item. Yeah.
I'm just thinking outside
Not
the
financial
box.
advice. Man, I thought Dad was bad on the compliance front. Holy cow.
Wait, that's not legal?
Anyway.
Oh, it's not an election year. Well, I'll be fine. Okay, so that I'm glad you mentioned all those things. That's very interesting to me. So what you're doing now on the there's a word for it. It's in my tiny brain, but it's not coming all the way out of my mouth. On the Fridays, the first Friday of the month or the last Friday, when we do our downtown sidewalk sales.
Oh, the
Yes.
mobile medical units?
No.
Or what?
No, when we do our sidewalk sales,
Yes.
you were just going to sit in the doorway and dole out advice.
Yep. Anyone who asked.
So that's the sort of things people might be
Exactly.
asking you.
Yes.
Okay.
That was the August.
All right.
I just sat there and waited for questions.
Did you get any questions?
I got
Anybody?
one really good one. One fantastic question. Really made me think.
Do you think they came downtown because you were going to?
No, I know
answer
they.
that?
I know they didn't, but I think that me making myself, or our company making ourselves available in the way that we're doing, gave that person the confidence to ask the question, because I know it was a hard question for them to ask. And yeah, I didn't have a great answer for the person. It was a hard question. So yeah.
Oh, good. Well, I'm glad you had some success with that. Yeah. Almost I could see you put on a table with the sign,
It's like a Lucy thing, like,
exactly,
a little,
yeah.
I
the financial advisor is in.
Yeah, exactly. I don't disagree.
It's on purpose, though. We try to keep things very casual, even inside the office. We feel the formal wear and some of the formal talk kind of steers people away. So we try to keep things.
So is that why your
casual.
tagline is a different kind of
Correct.
Financial
That's
advisor?
Exactly right.
Yeah. And that's the official tagline, a different kind of financial advisor.
Yep.
Okay.
Yep.
So when you say I'm liking this, no formal wear. So just like
Dad wears Crocs. Yeah. Dad wears sweatpants.
That was a rule that Mike definitely had before hanging a shingle. Was he wanted to keep things exceptionally casual.
Yeah.
Wow, that's a selling point.
Yeah, and
it fits well in Mifflinburg. It really does.
Yeah,
it really does.
I was toying with yesterday, like, is it a sweatpants day or not? It was in the morning, and then it went away. All right, cool. So, simple tax prep. Mm-hmm. So what happens there? Someone just shows up with a box full of stuff and says, "Hey, can you?"
Yeah, typically somebody calls in,
okay,
and we'll call in and we'll ask for tax prep, and either Mike or myself will jump on the phone and kind of dive into the situation a little bit, and we'll try to check to see whether it's basic tax prep or if they actually do need a CPA or somebody that can dive into more of the depreciation, all that kind of stuff from a rental property or a business or something like that. So we do simple tax prep. So W-2s, no rental properties or businesses where there's extra expenses and that kind of stuff. We do paper taxes, so we submit everything paper. It's not electronic submission.
I'm fine with that, but I'm old. And my accountant's always like, "Hey, you want me to electronically submit this one?" Yeah. Whatever you do, just as long as it's all legal.
Yeah. The big trade off there, it's worth mentioning too, is when you file paper, it's still gonna be received, but it will be a slower process. So we make
you get your refund
if you are getting a refund. We try to really make sure folks understand, like, we expect it will take longer for you to get your refund if you paper file. So
I always found it interesting that for whatever a small fee, H&R Block will give you your money on the spot, and then when you figure out what the percentage is that they're loaning you your own money at, it's pretty 25% or 50%. Yeah, like, oh wow, but you can have it today. Yeah. Okay, well, that's when I need beer. So good.
Sometimes you have liquidity, you need it.
Yeah, well, you're paying for convenience and instantaneous.
That is a good point.
And I apologize for the way my brain works, but I want to bounce up to the first point about the financial coaching. Yeah. Because I don't know if you know me very well, but I tend to hop from subject to subject.
No, you don't.
We've got to know you pretty well in the past years.
I stay on task. Exactly. So one thing, when you were talking about tax prep, I'm not picking on anybody, but what's the typical age range for your simple tax prep? Are these older folks, younger folks?
It's a mix.
Really?
It truly is a mix. We typically see older folks come in first, and then if they have a son or daughter that needs to file taxes, they'll bring them in too. But it definitely is a mix between all the clients we have.
Yeah.
Oh, that's interesting. Because I've never done that myself, but from what my son tells me, who's in the financial industry, is that it's almost too easy. Like you get on some website and plug in a couple numbers, and it kind of prompts you through everything.
Yep. Yeah.
Not that they shouldn't come to you; they should.
No, it's for the folks who don't want to do it themselves.
Right. Yeah. Okay. And then back to the financial coaching. Who are we looking at there?
That's a good question as well.
That's everyone.
Yeah. Young, old alike.
Financial coaching fits everybody because there are financial questions that people just don't truly understand. Typically, who will do financial coaching only will be those folks who are really 18 plus, all the way up into their 50s. If somebody comes in who the income investing fits, they also get the coaching service for free.
Okay.
included into their income
Right.
investing approach.
Well, I think that will be part of what you need to do to
Right.
invest their money
right.
well.
That's exactly right. Yeah.
Okay. So let's bump down then to let's just go in order, I guess. So income investing. So this is because Buffalo Valley Wealth Plus. So when you say wealth, that does that scare anyone away? Like, I don't have any wealth.
That's a good question because we've talked about
Talked
changing
about
the
that,
name
yeah.
because to keep with that casual approach, we also don't want to seem intimidating with our name, and wealth can be intimidating. But I'll let you jump into the income.
Well, and then
income
plus
investing
too,
approach.
like
Yeah. So we can both talk about the name and then chat about income investing a bit. So,
sounds like we're gonna have a debate between the two of you.
well,
I'll
there
just-
wasn't. There wasn't.
There
I
was,
mean,
there was
yeah,
a little
we-
bit of a debate on the
There was
name.
for sure a debate on the name, right?
yeah.
Like, again, I don't mind the plus. I like a lot personally because it says that we're trying to do more than just manage money.
I thought you stole that from LGBTQIA plus.
No,
That's not
Throw the plus on the end. That's everyone's doing it.
Dave, stop. Okay, come on. So we definitely didn't do that. The premise behind the plus was that it's wanted to be more than just wealth. I generally thought that we should just omit wealth entirely because of a lot of what you described. Eventually, you have to make a decision, though.
But you need something in there. Buffalo Valley Plus is nothing, but you need
Correct.
investing or
Correct. You
finance.
need some word that explains that we're in the financial services.
Yes.
And, we compromised, right? Like, Dad and I went back and forth on wealth. We weren't really sure. And I'm happy with where the name is. Plus kind of says we're more than just about wealth, but the word wealth itself, sometimes people feel excluded if they don't perceive themselves as wealthy, right? And we don't want
Well,
that
and who
at
doesn't
all.
want to be wealthy?
Yeah. Yeah. So I'm content with the name.
Yeah, I am too. We typically go by BVWP.
Yeah, exactly.
At this point, for most branding
Yeah.
purposes.
Right.
Yeah, exactly.
Okay.
We go by BVWP. But yeah, we went back and forth on the name for a while, just because we want the public to perceive that we are approachable,
Right.
because we truly want to help from day one. For those who might not have wealth to begin with, kind of get them on the road to saving for retirement and what accounts to save in and all that kind of stuff.
Right. Okay. Well, that makes good sense. Yeah. So in that light, I think it's probably good, since it's kind of an aspiration, not necessarily that you.
Well, I'm glad we got your approval.
You're not. Yeah. Well, since you had the sign made up,
No, we talked about
I guess I'll put the sign back up.
we talked about it for probably 3 to 6 months, right?
Oh yeah, we talked about it for a while.
It was a big
Yeah,
decision when you start a company.
Sure.
Name matters a lot. So
Oh yeah, I agree.
yeah.
But I thought, oh geez, if I'm not wealthy, what do I have? What's my business even being there? You know,
You're the plus, Dave.
I live in Buffalo Valley.
You are definitely the plus.
Yeah, no
Yeah.
worries. No worries.
Buffalo Valley Wealth minus. Okay, so talk to me a little bit. Let's bump down to health insurance, and we'll come back to income investing. So health insurance plus Medicare.
So part of that financial coaching service, so everything stems back to financial advice, and part of that financial advice comes health insurance and Medicare.
Why is that? Because it costs
It's a
money?
yes, it's a big
Okay.
piece of personal finance, right?
Right.
I mean, health insurance, it's not a secret, it's pretty expensive at this point. So from the financial coaching standpoint, we found that there was a lot of people who needed help, whether they were getting their insurance through work or they were a sole proprietor or an entrepreneur and needed help navigating the Penny system, which is Pennsylvania's portal to get health insurance. So we decided, because I had the insurance license, to offer that as a service. So we do have most of our clients who are clients in other aspects of our business are Penny clients as well, but we do have a few that come in just for the Penny service or Medicare help during open enrollment season, which is coming up here in the fourth quarter.
That's what I was going to ask you. Are there people that know exactly what they want to do, how to do it, but they want you to push those buttons because they hate this portal?
Yeah, so most people don't know what to do,
Yeah.
actually.
And I've never used it, but the portals I use for various government websites,
Sure.
they're not
They're not
intuitive.
easy.
They're
Yeah.
almost designed
Yeah.
backwards.
Yeah, so the Penny portal in and of itself, there's a lot of people that will jump on, try to do it themselves. They think it's a portal just for them to do on their own. And when they jump in there, they'll find once they plug in all their information, there's probably about 30 plans. And if it's not something you do on a daily basis,
Yeah.
that can be overwhelming, right? So it doesn't cost any extra money from the client themselves to come in and get advice on what plans are the best out there. Because we do it on a daily basis, we can kind of narrow it down for them. We definitely don't pick a plan for each person. Every person's different. But we present what maybe the top 3 plans are, explain how they're different, and let them choose from there what's best for them. So how we, full disclosure, how we get paid is from the carrier themselves on the back end.
Right.
That doesn't change the premium for the client at all. But yeah, they appreciate that extra help.
I hear noise through my headphones.
Sounds like it's raining.
Okay.
That doesn't happen in Mifflinburg in 2022.
Yeah, really.
It's nice.
Well, that's good because I'm thinking, oh, now what's wrong with my whole recording system?
Nah, you're good. As long as the roof doesn't start.
I hope not, because the master bedroom's above us. So to that end now, how many people come in and say, listen, I got on the portal, I did all my stuff, and this is what I picked, and then it said, no, that's
Not that often.
Really? Because
Not
it seems
that
like
often.
something you could get on and lock things in and be like, oh, crap, I should not have done that.
Yeah. I mean, most of at least the advertising I've seen gears you towards doing it yourself. But again, you don't pay any extra to go seek advice.
Right.
So why not seek advice from a professional who does it on a daily basis? So no, we've seen most people kind of come in and say, I know the Penny website exists,
Right.
but I was waiting to come in here to kind of hear what I need to do and, how I sign up for this coverage. Where we see it fits a lot of people is actually those early retirees that are pre-65, not yet Medicare eligible, that just retired, need health insurance, but really don't know where to go. So up until that point, they got their coverage through work, and now that's not available. So
Right.
do they do Cobra through work?
Right.
Do they do Penny? How expensive is each option? So that's kind of the stuff that we go through.
See that when you talk about all that to me is like you're speaking Chinese.
Sure. Yeah.
And sure, I mean, I've never had to understand any of that, and praise the Lord, my sister, in navigating through, my mom's 90, navigating through all that stuff is a wizard at it. So, so I don't have to know that. And then obviously we have a brother-in-law who's an insurance agent, so he helps when we don't know what we're doing. But luckily, my sister has become a whiz at all that elder care sort of stuff.
Yeah. And first thing we ask for even some of the financial coaching people is, do you have somebody you go to? You do? Perfect. At least you're getting some sort of advice you're not doing on your own. 'Cause
Right.
it's not something you do on a daily basis, so seek help.
So how often does someone come in and say, hey, so-and-so told me to do this, this, and this, and you guys are like, oh, no. Which you don't probably say like that, but what idiot told you to do that? No. But how often do you see people, I guess, misguided in terms of what you would recommend?
I think it depends on the line of business. We typically don't like to harp on the past, right? We try to look at their snapshot from that day,
Right.
and say, look, this is the plan moving forward.
Right.
What happened in the past is the past. We can't really change that.
You can't go back and reinvest 10 years ago.
No, you
Yeah,
can't.
I
You
wish.
can't. Yeah, that would be really nice.
Yeah.
But no, we try to take, for the most part, try to, bring people in, try to take a look at their snapshot from that day and say, look, this is the plan moving forward.
Okay. That's a good idea. I like that too, because people might have a certain amount of shame or guilt in coming in.
Right.
Have you ever had anyone come in and say, man, I'm so embarrassed, but you know.
Yeah.
Absolutely, right? People, like mental health, I touched on a little bit with like the relationship piece, but fundamentally, like if you're a financial advisor, your job shouldn't be to try and get someone like the biggest number on a piece of paper. Your job is to try and get that person to feel confident and to not feel anxiety about
More
the
holistic
money.
than just the dollar value in the bank. Okay.
Like shame, there are folks that have shame for past decisions they've made, and I see folks that, because of whatever has existed in their prior life, like they struggle to consume, to spend money. And I think spending guilt in our area in particular, like, is a very frugal ethos in Central PA. It's a value that's very valued.
Yeah,
It's a thing
I would
people
say.
respect a lot. And when we talk about income investing, we'll get to that, but spending guilt, I would say, is one of the biggest challenges folks have. Especially
Really?
as
See,
they
I
go
would have
into
figured it was the
retirement.
other way. Like people were guilty because they didn't save enough, or that's what you mean. They feel guilty because they spent too much.
That's not what we see. What I think we've seen is the opposite, where like folks will have accumulated this tremendous position by all the sacrifice and hard work they've
Right.
done, and I think I see us, especially Dad, has these conversations, and I wish he could speak to this, but didn't come. But like the idea of trying to get someone to recognize that you need to consume, you need to use what you have accumulated because you can't take it with you,
Right.
right? And that is a huge struggle. And
Yeah.
it takes many, many years. You know, people that Dad has been working with as friends, you know, even a decade later, right, they still have these same conversations. And I hear him telling people, you need to spend your money. You need to spend your money,
Well,
right?
that's
You know?
interesting because I know someone that used to work at a bank, and they would tell me they had one customer. You know, obviously they didn't tell me names or anything,
of
and they
course.
said this little old lady would come in every Friday and get $5 out for the weekend. And
Yeah.
one day she said, "Now I'd like to take out 10 if I have enough."
Yeah.
And
Yeah, exactly.
enough was
probably
there was
had
like
plenty.
$80,000
Yeah,
or something.
Exactly. So that like scarcity
That's
mindset.
common to our area.
Wow,
For sure.
that's good. Well, I mean, it's bad, but
It's
I
interesting,
respect that
right?
because that's where I am.
Yeah, it's interesting, right? It's important to be aware of it, whether it's good or bad. I don't know. I have a personal view, but it's important to be aware of it, right?
Okay, I trust you. But should I? We'll find out.
Right.
All right. So we went down and we talked about the health insurance part of all this. So let's talk about the income investing, and let's switch gears and do that kind of as a someone walks in the door. You know what I mean? So you told me about the vast different kinds of clients, but I want to say a typical client says, you know what, I think I need this service. And they call you and they start from there.
You want to jump on that? Or you want me to
Well,
take it?
I think there's a lot of pressure on this one. So this
From me, you mean, or
no,
in
for
general?
us, right?
Oh.
So part of this, the income investing piece, right? Like Dad's obviously going to listen to this at some point, or maybe he'll like tell me he didn't, but he will. And the way we explain, yeah, exactly. The way we explain income
Don't tell
investing.
him how to get online to listen
Yeah, well, good luck. He's learned a lot really fast from
Yes,
technology front.
yes.
I'll actually give him credit for something on that one. But the income investing thing is really an ethos that he's developed, an approach that he built out, and I think it's cool. Like I classically trained in finance, right? I went to Wharton. I took the investment management classes, and what happens with our clients is really, really interesting because what the book says about how you should think about personal finance is based on like a version of a person that doesn't really exist. It's based on this like model of rational thought that is not how anyone actually wants to live their life, or is
Yeah.
usually not how anyone wants to live their life when they're 90 or 80.
I can
you know?
respect that because of my involvement in fitness.
Yeah,
Because it's based on this one 165
Yeah.
pound male with 20% body fat. So therefore, but that's nobody, you know.
Right.
Yeah, and the thing about it is like once you ask this like sequence of questions that Dad works with folks to do, like the whole asset allocation model, the like Trinity study, all these things that are classic finance of the past 50 years, they don't make any sense anymore. Like it's the wrong decision for the client. So I'll give it my best, and I don't know. Lou's seen more of these meetings in person, but I generally have a feel for how it goes. So the premise behind income investing is that you don't want to die really wealthy, right? Most people don't want to do that.
So it's more of a matching strategy.
It's more of a matching strategy, and it's also based on this idea that, especially in our area we talked about, like there's spending shame and there's this frugality value, and he starts by showing folks what they expect to bring in every month when they're 80, okay? So in our area, that's usually Social Security. Sometimes it's two Social Securities. And frequently there's like a fixed pension involved
Right,
too.
right,
Like
right.
a lot of the big
Sometimes, too.
employers, sometimes, yeah, exactly. A lot of the big employers in our area still have some sort of fixed pension component. And then what happens is you ask the person, okay, well, what do you spend every month? And what, like 9 times out of 10, folks will be spending less than what their fixed payments already are. And then it's like, okay, well, in addition to the fact that you've just shown me you're going to cash flow at 80, by the way, like you're going to have excess cash every month just from these existing, items. You have this big pot of money, right? And then what starts to happen is like, what's the plan for that? And what folks quickly start to realize is like if they continue on their current path, the amount of money that they'll have when they're 80, 85, 90 in expectation, right? That's important to add. Like we don't know exactly, but if you stick with your current strategy, what's most likely to happen is you die the wealthiest you've ever been. And as a company, like on the record, we think that is very foolish. And most people, when you present it that way, agree. They're like, yeah, I don't really want to do that.
So
Yeah.
the thinking there, because I could see like, geez, I want to die with all that money so my kids have it.
Correct. So that's the next piece, right?
Or
That's
whatever.
that's
Yes.
the most
Or
common.
maybe some legacy that you want to establish,
Right.
a
Maybe you hate
scholarship
your
fund or, whatever. Yeah.
Well, interesting piece to that. We haven't had anybody that's wanted to do that.
What, like,
The legacy piece.
oh, really?
It's a blend, but yeah.
Yeah, it's mostly they want to leave it to their kids.
Right.
Yeah.
And then we
That's a good-
kind of jump into, okay, you want to leave it to your kids. You keep hoarding this money. How does it get passed down to your kids? Well, most of them say once I pass away, they'll get whatever's left. And the issue with that becomes estate planning, right? So
Yes.
if you end up in a nursing home, if one ends up in a nursing home or both,
Right.
it's not cheap to live in a nursing home.
That is correct.
And that could eat into that lump sum.
Right.
Not only that, if you pass away from something like the COVID pandemic,
Right.
right? So like most people who had that lump sum of money and may have passed away during COVID, the market was down 30%. If your money was invested during that time, if you had, for argument's sake, $100,000, it was down 30%. Now you pass down $70,000, not
Right.
100.
Right.
So we kind of go into from that piece. We now know that you are cash flow positive at 80, 85. You have this lump sum of money. What are you going to do with it? I want to pass it down to my kids. When do you want to pass it down to your kids? Do you want to see them use it? Or do you want to pass it
When
down
they're
and not
75.
Really know, right. When they don't
exactly
really
right.
need it.
Yeah.
Right.
Right.
If you wait till you pass away, they don't really need it when they're 75.
When they're 55, that's normally like if you live to be 85 and you have kids when you're 30, your kids are 55 when you die. Think
Right.
about like when do you actually need the money? Dad has a bunch of great examples, and
Sure.
I'll share one here. Right, like he says, you could be sitting at home. You're 75. Let's call it 67 years old. Your kids are 37. They have a family of 3, and they don't know if they can afford to go to Disneyland. And here you are sitting on $1 million. Right, like your kids are now not taking your grandkids to Disneyland because you want to give them money when you die at 80.
Yep.
And like when you say that, nothing about that is untrue. Like that situation could exist, and it probably does exist out there. But no one is happy about that. Like no one thinks that's, or we have yet
Yeah.
to meet the person that thinks that's a good thing. So if you don't think that's a good thing, then like this framework of start creating and doing your legacy prior to end of life is a really good fit. And yeah, I mean, we can talk more about how we actually do that. It's a little more technical.
Do
but,
you,
yeah.
when you talk about that scenario, do you also consider their, I'll say, kind of their living arrangements?
Sure.
Because in my personal situation, I'm always talking to my wife about, eventually, we're going to live on one floor. And I said, you know what we ought to do is just have the public sale now. Just sell everything we own and move into a little place with one floor and be done with it.
We in the first few meetings, we have all those conversations. Where do you see
What's your
yourself
plan?
at 85?
Yeah, what's your plan?
Do you see yourself downsizing? Because that could be a big portion of that lump sum. You might be adding to that lump sum
Yeah.
once you do downsize. So all that goes into the first few meetings.
How many people shy away from these conversations because they don't want to think about that? Because I don't want to think about, like, I don't want to think about being
Mortality?
85.
Yeah,
No, I'm not afraid of death. I'm just, I don't want to think of myself like,
There's quite a few clients that say the first thing that Mike will tell you is you have one foot in the grave.
Exactly.
That happens pretty often.
Yeah.
But it's the reality, right? Some of these conversations revolve around your parents passing away. What inheritance is there?
yeah.
So it's a morbid conversation, but it's one that has to happen.
Right.
We're pre-planning, right? So some of this stuff has to happen.
Yeah.
Interesting. Because I don't mind talking about that, but I'm pretty morbid anyway. So. But I can see a lot of people, they don't want to think, oh, I don't even think about a day when I'm not here. That's,
Yeah.
you know.
I think you can be respectful, but it's a barrier, right? And it's the whole idea of like what we're talking about here is total wellness, right? So that aspect of not wanting to talk about the fact that, you're 72 and when you're 82, you're not going to be able to do the same thing, or you should expect, right? I don't know, but I would expect for you to not be able to do the same things that you're doing now.
Right.
That's a loss. And you're like telling that person, hey, in the next 10 years, you're probably going to lose some of these things. And depending on where the person is at, that can certainly be tough. You're not wrong, Dave.
Yeah, I especially with things like travel and those sorts of things,
Yes.
because
Yeah, you're not
All the
hiking
time
the
we
Grand
say
Canyon
that.
at
Yeah.
90.
yeah,
Right.
and the things that tend to make people not able to do those things come quickly. Mm-hmm. Like, oh, geez, I wanted to see Italy, but I had that heart attack, and now I can't walk 7 feet. So
They're
that's
unexpected.
off the table. Yeah.
Yep, they're
So
totally.
use it while you have it, I guess. Okay.
That's the goal.
With a little bit of a cushion, so
Yeah, with someone to help you that you trust and come up with a plan that might be different from what your neighbor is doing, but that's because your neighbor has a strategy that is based on, the Trinity study and like this other ethos that you fundamentally just agreed is wrong.
Right.
Right? So, you might be getting more out of your investments on a percentage basis than they are, but that's because we've taken away your upside to die super, super rich.
Right.
But it's because you don't want that upside.
Right.
You want to see your impact now. That's basically the trade that we make from a technical perspective.
how often, this is something I've seen in various places, and I'm always like, wow, why would you do that? But I see a lot of people, I don't say a lot, but I've seen people that are living so far beyond their means because of the way it looks. But maybe those aren't the people coming for help, because as far as they're concerned, you know what I mean? And I'm talking about, like, I had a conversation once with someone, and they said, hey, I need a new refrigerator. I said, all right. And they said, do you know are there any coupons like for Lowe's or whatever? And I said, why don't you buy local? You can go to one of the local appliances. They said, no, I need to do it on the Lowe's credit because I don't have enough money to go buy the refrigerator.
Yeah.
And these are like a double, both family members working, and they have a TV on the patio and a pool and you name it. But there's not enough money to buy a fridge when the fridge dies.
Yeah,
you
I wouldn't say we recommend people live without their, above their means.
No, but
We
I'm
try
saying,
to
how
reel them
often
back,
do you
but
see someone come in like that to be corrected? Or are they not the people seeking correction?
we've had a couple people that
I was going
were,
to say, I have some thoughts on that. It's complicated, first of all. I'd say to some extent, there's an element here that's like, okay, even in the sense of the way we're talking about this question, we're basically saying, like, that's not the way one should live.
Yeah, it is a little
bit,
judgy.
a little
That
bit.
is-
But it's not like you're wrong. I don't know if you're wrong. But, like, there are folks that, make it work paycheck to paycheck and are very happy. And then there are folks that have a bunch of money in the bank account and aren't happy. I don't know who's right. My job isn't to decide that. My job is to, like, make sure folks understand and help. So
Within their mind frame set
within-
of
exactly.
happiness, of what happiness is. Okay.
Exactly, right? So if it causes you anxiety to know that, like, if your car breaks down, like, your whole world's going to fall apart, then, like, let's try and fix that together. But if you don't want to save for retirement, and you're gonna work, and whatever you bring in every month till the day you pass is it, and you're comfortable with like Medicaid and the assistance that's available as a social net, then like, okay. I'm personally maybe wouldn't do that, but I'm not gonna like. I'm just gonna talk to you about that. I'm not gonna be like, don't do that.
Right.
You know. To Lou's point, I personally have worked with at least 2 people in this situation through remote financial coaching. They were both referred from a family member, where like the family member more or less. It was almost like an intervention.
I was just
It was almost like a financial intervention, and
I see you got me a gift certificate for financial coaching.
That's honestly, that's exactly what happened. And it was like, okay, we have buy-in from this family member to try and work with this objective third-party guy who, I generally trust and isn't going to judge and is like going to try and work with them. And in both situations, eventually what happened was like a very respectful split. It was more or less like, okay, what Lance is telling me, I don't think is wrong, but I'm not willing to make those sacrifices, right? Like, Lance is telling me I can't afford to get another dog, or telling me I can't, some of these things that are like a pet brings a lot of joy to someone, but they're not cheap.
Correct.
So like if I, as a financial advisor, say like, that's probably not going to fit in the budget, and this person wants to go buy a puppy, like after the decision is made, who am I to tell them they're wrong? Right. I did my job when I tried to explain the trade-offs and like pet insurance and those things. So
what'd you name your dog? Money Pit.
Well, yeah, or like source of happiness,
Yeah.
So who knows? And I've had 2 specific examples. They were both remote clients that were referred through friends, and they were some of the most rewarding experiences for me personally, because I wasn't raised that way, with dad, and I learned a lot. And eventually, it just said, okay, thank you, but like. It's not going to help for us to work together anymore, because I'm not willing to follow like what you're kind of laying out for me. So
do you, again, not that you're a new business, but you haven't been doing it for 25 years, but are you at the point yet where anyone comes and says, hey, I don't know if you remember me, but you worked with me before and you changed my life and that kind of thing?
If you get anyone tell you,
Not come back and say, do you remember me? But there's been a couple of people. We do an annual review.
Okay.
And there has been quite a few people, once we show them, look, these are the answers you gave us last year. They say, wow, we've come a long way.
Oh, good.
Yeah.
So that must be good for them to see that these are the changes I made and they helped, and that must be good for you to say, well, I guess I gave some prudent advice.
That's reward for us, right?
Yeah. I've had a few people who've had the most rewarding clients to me, I think, are the people who have good credit but have credit card debt. If someone has good credit but has credit card debt and has a current budget that balances, when I see that, I get excited, because I know I'm going to be able to like hit the cup. Like I get excited because I know I'm going to be able to like take money from a bank somewhere, right? Like if you're in that situation, and you've like whatever happened that caused you to have that debt, that's like really bad debt, but you've been making your payments, so your credit score is solid, and your current job and life situation is such that you are saving money every month, like we can help you a ton. And those situations I've had maybe 5 of. Yeah. And every time that happens, like it's just like a slam dunk, because it is not hard to basically, or it's generally not hard, I should say.
To get rid of that credit card debt.
Exactly. Like I can roll that somewhere else, either pay a small fee or do like a 0% APR transfer. And if the person has that, if the credit isn't destroyed, and that's usually the hard piece. If the credit's still there, like you can save them a lot of money.
I would
pretty
think,
easily.
Just when you paint that picture, it seems to me that would be a rarity, because if you have a lot of credit card debt, it seems like you would not have a good credit score.
So all you need to do is make sure you don't miss payments.
Really?
Right? So utilization matters, right? But the thing that kills your credit score, and the only thing that can fix it is time, is like not making minimum payments. Missed payments, derogatory marks, bankruptcies. That stuff is 7 years. I cannot help you no matter what I do. I can't help you. Utilization, like how much of your available credit we're using, I can work with that, right? Like that gets recalculated every statement.
Right.
So that's a thing that like we can work on together. So even folks that have credit card debt frequently will be making their payments. And if they're doing that, oftentimes they'll come in with like a 730, a 750, and they might have 10, 20,000 in credit card debt. And like, I can work with that, you know? And
See, I thought that wouldn't be the case. I thought if you had a big credit card debt, you would have a bad credit score.
Well, I mean, that's the piece of education that we help people understand where their credit score comes from. Yeah. There are people that come in that have no idea.
And that irritates me now because the times my credit has been dinged, missing payments, is when I switched over from paper bills to doing all this online, and then I'd go get online and it wouldn't let me in the portal, and I'm typing in the right number, and then I'd have to call and say, hey, listen, I was trying to get on yesterday. Oh, well, I see. You're trying to get in this part of it, but you need to log into that part.
Yeah.
There's one mortgage now that we bought an investment property, and it's through a bank that for me to pay my mortgage, you would think you log on to the portal and log in. Don't do that because that's not the right thing to log into their regular bank thing. So you'd think, okay, well, you got to log into the mortgage payment section. Also not the right thing. You need to get in to pay. I need to get in to pay this mortgage by going to this drop down, selecting auto loan, which I don't have, to pay my mortgage.
So I think that's a really good point to bring up about trade-offs, right? Like, it's really nice. So all of finance, to me, all of life, whatever, is about decision making, right? So and it's all luck too. But there's an aspect there where, like, when you go to get your mortgage, you can go to Rocket Mortgage, you can go to Quicken, you can go online and, you know, work with a mortgage broker out of Columbus, Ohio.
Right.
That's where Detroit. That's where lots of them are. Or you can go down the block and you can work with, you know, people you went to high school with.
Right.
And there's so much more to that decision than just what does the monthly payment look like? Like, if it's going to cause you anxiety, right? Like, what you really have to think about what's important to you. And again, like, my job is not to make that decision for you. It's just to tell you, like, hey, if you work with Mortgage R Us out of Detroit, Michigan, you can't go knock on the door and have a cup of coffee with the loan officer and say, hey, I'm confused about what happened with my payment, right?
Yeah.
So that has value.
When we got married in 1992 and bought a house, we went local with the mortgage. Couldn't have been any more local.
Yeah.
And then I don't know if it was 5 or 6 months later when the letter came, your mortgage has been sold to whatever.
Yeah.
That was the end of the local part of it.
Yeah,
So
that can happen too.
That's common.
And that continued on until it was paid off.
Yeah.
Which wasn't bad. We didn't need much hand holding. We sent them, money every month. I mean, literally I'm old, so we sent an actual paper check.
I'm old.
He says.
Well, and you said, oh yeah, would you rather do business with someone you went to school with? I'm like, yeah, they're all retired.
Sorry, I made a personal bias there. I had specific. Yeah, you get it anyway.
All right, so that was a great education for me on income investing, and we talked about health insurance, and Medicare. What about life insurance? Now, can I tell you my life insurance experience?
Sure.
Because I guess we had some through my wife's employer, and I would imagine I had some when I was employed at Geisinger Medical Center.
Yep.
And then at one point we got some independent health insurance, and a nurse had to come to the house, and she asked us all kinds of questions and filled out all kinds of forms. And then
probably had to do a urinalysis and
that's
blood work.
That's where it went south. Turns out, despite drinking all day long, making sure. This lady was becoming more and more unhappy by the minute. Okay. I mean, she's like, okay, here's your little cup. Nope. Waited and waited. Now she's making suggestions. Why don't you go upstairs and run the shower and see if that helps? This lady was getting more and more irritated. Finally, I eked out 7 or 8 drops.
Baseball playing days, there were a lot of people that had stage fright.
Yeah.
That happens pretty often.
Yeah, well, this lady was unhappy about it. I'm like, I'm sorry.
So you can expect both of Wealth Plus empathy, Dave. It's okay. Is what Lou is trying to say.
That's why we have the water cooler in the corner.
You're not alone. Anyway, yeah.
So that's the life insurance. So tell me about what you do for clients with regard to life insurance.
Yeah. So life insurance, again, stemmed from the whole financial coaching meetings,
Right.
right? So life insurance is another thing that costs money, right? So from a personal finance standpoint, we try to make somewhat of a one-stop shop for personal finance. Life insurance can be very tricky. There are a lot of different policies and programs out there. You mentioned life insurance from work. Very inexpensive, very good programs, but they don't go with you, right? So when you leave employment, sometimes they have a provision that allows you to take it with you, but it's typically pretty expensive and most people don't do it. They just wait till they get to the next place of employment and find out what kind of life insurance they have at that point. Again, not something that stays with you, right? So you retire and it kind of goes away. So it's always good to have some sort of individual policy. Most of those individual policies are going to come with that extra underwriting, right? So the urinalysis, the million questions, all that kind of stuff, that's normal. But what we try to look at from a life insurance standpoint is when you are younger and trying to raise a family, that's not when you have all those premium dollars to pay for a whole life or universal life policy, right? So that's extra money that could go towards living that day to day with your kids raising a family. So when we look at life insurance, we typically try to steer people towards income protection, right? So when you're younger, mortgage protection, and income protection. So when you're younger, you typically have that mortgage. You have your 1, 2, 3, however many kids. Once that last kid is born, that's your highest level of life insurance you need, right? Because if you passed away that next day, your spouse needs to be able to live off of whatever life insurance proceeds were there. If there were none, then she or he is in a sticky situation, right? So that's where the life insurance protection comes into play for a younger family. Now, once we are starting to get closer to that retirement age, we actually switch gears to more of an estate planning tool. And we typically recommend survivorship life insurance that allows for passing money to heirs without any tax liabilities, right? So death benefits are always passed down tax-free. So if you use some of the income investing strategy that we use and use that to pay premiums, that allows you to pass down that survivorship plan to your kids. Once you get to that stage of life where you do pass away and there are assets, they either go through probate or it takes a while for the money to be passed down, or you have 7 siblings and none of you can agree, right? That's where life insurance kind of comes. It truly is the best way to pass money down to your heirs. So we typically do what's called a guaranteed universal life survivorship policy, which basically states that both parents, if you will, need to pass away before it actually pays down to the beneficiaries.
Right.
So using the income investing strategy, we promote spend what you have accumulated in your life, and then use some of that money to actually pay the premiums to then pass down what you have left in life insurance. Yeah. It's a much easier way to pass money down. Yeah. Like I said, if the beneficiaries call with a death certificate, it usually takes a week or two before that money's passed down versus it going through probate, going through lawyers, all that kind of stuff.
That's a good point.
It's also a lot cheaper usually because it requires 2 people to pass away. If you have policies on each individual guardian or parent, you have to start thinking about setting up your like when do you want to change your beneficiaries from your partner to your like next generation of dependents, all these things. So yeah, in that regard, survivorship, the premiums are generally lowered too. And it meant I didn't know about this product when we first started, and Dad and Lou brought it to my attention. I'm like, that's a good fit. Like that.
I thought you were going to say your wife. Your wife brought it to your attention.
No, not at all. Definitely
Lance,
not.
I think you should be insured here.
No, that's not an issue. I have my own thoughts on life insurance. We sometimes go around on that, but separate. But the survivorship is. I don't know why it's not more common. I truly don't know, but I learned about it from Lou and Dad, like I said, and I'm like, this is a really good fit for a lot of the need that we see. So, yeah, I'm a fan.
So it fits the income strategy really well because, like he said before, we promote you've saved this money, you've worked for this money, you've sacrificed all your life, spend some of it. And as we put you into that income investing strategy and money's being pushed out, some of that money can be allocated towards the life insurance that ensures that that money is there to pass down to heirs. We talked earlier about passing away from COVID or going into a nursing home.
You called it the pandemic, though.
You did.
I didn't know if you.
Did I switch back from COVID or from
Well, I was
pandemic
waiting to hear you say hoax, but go ahead.
And BBWP has no view.
No view.
That was the compliance officer stepping in, shutting it down. No view. It was a financial stressor. Period. Next topic.
Tried to bait you in.
No view there. But passing away from something like that where, some of your lump sum has been either gobbled up by the nursing home or a downturn in the market, that life insurance is constant.
Right.
So long a premium is paid, the death benefit will be paid out.
Right. Yeah, that's fantastic. That's a great idea. I'm going to ask you each a couple off-the-wall questions just for fun.
Love off-the-wall questions.
man.
But Lance has been feverishly taking notes the whole time, so maybe
Yeah,
there are things,
I write things.
there are things we didn't cover. Maybe that.
No, I was getting nervous as soon as I saw the framework, and I should have known this. Being studious or whatever. I'm like, he's gonna ask you to explain income investing. Your dad's gonna listen to that and give you feedback and tell you what you messed up. I already know what I messed up, but it's okay. We'll deal with that with him later.
I'd say I could edit that out, but I'm not gonna.
No, I'll just say it now that I've gone there.
I'll Photoshop that out.
The income investing strategy requires very active management to work. And I think it's important to recognize that and to give him credit. And Lou, who's basically signing up to be the next, the next
So you're
generation.
closely following everyone's
Very
investments.
closely following the accounts to make sure that they're getting that cash flow that we've basically told them to expect. In that regard, it's generally different. Materially different. I feel comfortable saying that from a standard asset allocation approach that is going to say, okay, you're going to have this much in equity, this much in growth, value, all those buzzwords, international, emerging, yada yada yada. This much in corporate debt, municipal bonds, all that stuff. That is not what we do. And I think it's like I said, I think it's important to recognize for Dad who's doing that work. It's a lot of work. The lights are on Saturdays. The lights are on Sunday mornings. He likes it.
But he has to
but he's
follow
working.
the markets
Yes.
and his clients.
Yep, he's constantly working. So that's different,
So,
in my opinion.
So is he, when I was doing, and I consider myself a financial genius because I day traded for a year and didn't lose any money.
Oof, that's impressive.
Yeah,
actually.
I thought so too.
For a whole year?
Yeah.
I'd have to see the numbers.
Wow.
I'm not going to call you a
No,
liar,
I didn't lose any money. And I thought, wow, after seeing some
That's
of the
pretty
horror
good.
stories and I broke even,
Yeah.
I'm like, whoo, boy, did I get
a
lucky.
year.
Day trading's very tough.
Yeah, oh yeah.
So-
But that was a thing for a while.
Yeah.
But so how obsessed are you guys with the markets? Oh, did you see what happened today? I have a brother-in-law who's really, he loves to talk finances and relationships with regard to, okay, well, this is what's happening in Russia. So that means the Chinese currency is going to go down, but the Deutschmark's going to go up because of the investment they have in International Harvester and all this
You are
kind of.
old, man. The Deutschmark hasn't been around for 20
Well, I
years.
don't know. I'm just making.
Holy cow, Dave.
Again, it's Chinese to me.
Talking about D-marks in 2022. Okay, fine.
They're using them euros, I guess.
Exactly. Pounds back. Anyway,
Kids.
yeah. Sure.
Yeah, I mean, I'd say we watch it daily.
But you're not.
We truly do. To say that we can predict what's going to happen is
Well, of course not.
very far
But I
off.
just wondered how closely you were looking at
Yeah.
individual things like, oh my gosh, Apple did this today. And
Yeah, so we have plenty of companies that we watch on a daily basis. We read up on each one of those and make sure that they fit the mold of income investing for our clients.
right.
So we're reading earnings reports and all that stuff on a daily basis. I'm essentially the succession plan to Mike, right? So I'm learning some of this stuff from Mike. So I am reading up on a lot of these companies and making sure the earnings reports are, accurate and all that kind of stuff. So, we watch it pretty.
I was
Pretty
surprised
closely.
how, just like the weather now, you can get the same information that Joe Snedeker gets. Same with financial statements and all that. You can get online and see what's happening live. It wasn't always like that. Back in the 90s, there were, this is what happened yesterday, but now it's boom.
Mike explains to me all the time that trading has changed drastically from the time he started.
Oh, I bet.
40 years ago or whatever it was.
And I remember printing out charts and drawing. I can't remember what the lines were called and all that kind of junk. It's just like, wow.
Yeah.
Yeah, it's instantaneous anymore.
Yeah, I think that the big thing there too, our accounts generally, I personally see it like given where I've come from the background, our accounts are over diversified, right? Like we'll hold more names than, if Dad kicked the bucket and Lou wasn't ready yet, like my personal view would be to have slightly fewer names, so it would be like less work to try and keep track of all this stuff. But the benefit of having more investments is that if you're wrong about any one particular investment, it has less of an impact for the clients. So that's another area that makes excess work. Me personally, I do not. I make it a point not to, because it's an incredible amount of work. I will follow macro stuff, right? So like war in Ukraine, how's that going to flow through? And interest rates in particular are really important, extremely important for what we're doing. So I'll pay attention on like FOMC days and Humphrey Hawkins and stuff like that, because that flows through to almost everything. I get chills just thinking about it, Dave. Like the mortgage rates, like all that stuff, and that's super important. So like clients ask about that, and you want to be informed.
Right.
A client asks me what my view is on Google. My answer is going to be like, that's not the right question. But if a client asks me like what my view is on like how conflict in Ukraine or Taiwan or interest rates, like I want to have an answer to that because I generally agree. Like that stuff matters. Like you want to be informed there.
What do you think about Google? I don't know. I'll Google it. I don't know.
It's alphabet now. So yeah, exactly.
I use it all the time. Huh?
Guess I ironically should how old I am. Yeah.
I remember when the search engines, you guys maybe don't remember, but there was Lycos and Ask Jeeves and Dogpile.
Yeah,
and
absolutely.
Oh, yeah.
Mr. DeFascist, we'd use.
We're not that young.
Yeah, we're.
So, what did I not ask you? Did we cover all the fun stuff about your business?
Yeah, I think we have the stuff that matters. Yeah, it's like one of the big ethos is you can't take it with you, and to like anxiety reduction versus like number maximization. Those are the guiding principles. I think, like if I had to, present before a regulator on why justify a different kind of advisor, like those are the answers. Right.
Yeah, I would say from the income investing approach, our approach is not to, bring somebody in and take that lump sum and grow it so that they're the richest they've ever been, like we talked about. It's actually for that value to bounce around, but pretty well stay the same. And that growth that they would have seen otherwise, they actually take out. And spend it and use it. And if you can't use it yourself, pass it down to your kids early.
Yeah.
Because it's to be the richest you've ever been when you pass away. You didn't see it used. You didn't see what your kids did with it.
Right. Yeah. I see. Yeah. And that's not how I thought about it. I was caught up in the whole cultural build it, baby.
Sure. Yeah.
Well, the other piece there, I think it's important to mention is like how we charge. So we talked about the $200 a year because that's super straightforward. But the income investing, right? We charge like the more you have, we charge a fixed fee, a percent fee. So that means the bigger the number is, right? Like the more we're making. So when I tell you like, hey, you need to give away some money or do something with it, that's actively detrimental to our revenue as a company.
That's not the point.
And exactly, it's not the point. But it's also probably correlated with why that advice isn't generally out there in the financial services community, right? Like, if I had a bunch of shareholders to answer to that wasn't my dad and Lou, and I'm going around telling my clients to do things that are going to actively harm revenue, I'm going to have a hard time at that board meeting. Even in 2022, like things have changed a lot, since you go to Wharton and it's like maximize shareholder value, but still, that's a lot harder to do if you work for a bigger company, whereas the three of us agreed from the outset.
Right. Well, you would have to, or one of you wouldn't be
sued. Yeah, exactly. Like we agreed from the outset this is a core value of what we're doing, and I think that's cool. It makes me proud to be a part of it.
I'm proud of you for doing that. That's contrary to what you would think elsewhere.
Yeah.
Sure.
All right, so your business logo has a home plate on it. Was that a happy accident, or? So let me describe.
Chevron,
let me paint a picture for the listeners. It's a BVWP above a home plate with a buffalo in it. I can figure out where the buffalo is represented in Buffalo Valley Wealth Plus. Is that the home plate?
Yeah, so the home plate comes from Mike Miller being an umpire for
Right.
professional baseball before he moved, I guess, back to the area.
Right.
He got as high as Double A.
Yeah.
Yeah, he was Double A umpire, and then myself, I played baseball over at Penn State from 2009 to 2013. So we kind of had that common area, so we wanted to throw that in there. And actually, Lance's sister is the one who came up with our logo. So we just told her we wanted to incorporate something baseball, and she's the one that kind of threw that out there.
Yeah, Amanda did that, and I'll just go on the record as saying I think I was hitless in Little League, so that's also impressive.
I wasn't going to put that in there.
I mean, I think it should be on the record. Probably tremendous
What's your
disappointment.
name? Owen.
Yeah.
Owen 35.
Yeah, seriously. Had a great eye. I walked every once in a while. Was more interested in keeping the book probably, but
And his dad was the ump.
yeah, he was
couldn't get off
He was
base.
just disappointed in the outfield. I think he was just like, man, this kid is rough. I know.
That's funny.
No, yeah, baseball kind of ran through both Mike and I, so we wanted to incorporate it somehow.
All right, so let me ask you this off-the-wall question. So being a sports person, you follow other sports.
Absolutely.
What is, in your opinion, this sounds going to be judgy, but what's the lamest sport? What sport do you think is incredibly
Oh,
boring?
geez, I love watching all sports.
Oh, of course, that's the
really-
good answer.
I
But,
really
but one of them's got to be boring and like.
I don't know. I truly.
Lance is going through the client list.
So
I
even
don't
like the
think we-
nature of the question, lame. I don't. It's kind of ableist, but it's just even more loaded. So I would say chess because you don't need even someone who had entirely removed all physical ability. If they still have their cognition, they could play chess and let the debate on whether chess is a game or a sport
I was going to say,
begin.
is chess a sport?
That was so terrible of an answer. It was perfect but terrible.
Yeah, no, I don't know that I can think of one. I was introduced to more sports once I got to Penn State. I'd never seen fencing before. I'd never seen field hockey before.
Fencing is in. I
Hockey?
Field hockey is not a sport down in Miami, Florida. Nope.
wow.
Nope. I had not seen some of these sports, and I mean, I still went to most of those games. So, no, I like
took
watching most
fencing in
sports.
college, and I enjoyed it because I had a background in martial arts, and I thought this is going to be really good. And then they showed us a professional fencing video, like the Olympics or something. It's completely not what we were doing.
Penn State has a very, very good fencing program.
Not to me, that's incredibly fast, but it's really boring to watch it. Like, go, bloop, beep. Like,
I don't know.
I
There's a lot
guess
of
someone
there's a
stabbed
lot of
someone
yelling.
because the buzzer went off,
There's a lot of yelling going on. No, I mean, I had a
What do you
lot of
mean
friends on
yelling?
the
Like-
fencing team. Like once they scored a point, there's a lot of yelling. No, I guess,
You mean in
I
the
guess-
crowd?
here's
Like,
a hot take. Here's
I've
a
never
hot
seen
take.
anyone start a
Here's
wave
a
at
hot
fencing.
take. Here's a hot take. Miami, Florida wrestling's not very big.
Okay.
Don't know how the scoring works. Don't really watch wrestling for that reason.
Edit that
So,
out. That's,
yeah,
that's bad for business.
I not wrestling's not a sport that I follow.
Well,
Not
once
that I won't watch it.
but
I don't follow.
But once
that.
you go from high school to college wrestling to Olympic wrestling, it's incredibly different and
yeah,
difficult.
Penn State wrestling is okay.
Stop. Cut it. Cut them off.
Friends that wrestled at Penn State, that's not a big sport in Florida, so I didn't watch that much.
All right, let's come up with an off-the-wall question for Lance that he'll
Jeez.
try and give me an
Ay,
innocent
ay.
answer to. Lance, if you
seriously.
could be any animal, what would it be? And you can't use buffalo.
That's a good question. Man, I don't know.
That's not an allowable answer, Lance. You want to phone a friend? Beer.
Bear. I think so.
Oh, you said bear or beer?
Well, I said beer first, but that's clear because I was stressed.
Well,
'Cause you put me on the spot. So I think
But you could
bear.
extrapolate that to yeast, which is
that is an animal, is it not?
it's one of those.
Bacterium?
When I learned, it was kind of a
Monera? What is that?
yeah. It's in between like a animal plant kind of thing.
Fungus? No. I think a bear.
Here comes
Bears are
biology.
pretty chill.
Bear because you like a bear
Omnivore.
market.
I mean, you can make money in any market, right? It depends on your position. So I think a bear is a good animal.
All right.
I'll take it. They're
That's a good
generally
answer.
chill.
Not exciting, but it works.
Wow, this is a hard question.
All right, gentlemen. Thank you for joining me in the booth.
Absolutely.
you.
Yes.
Good job.
Thank you.
Love it.
Ah, crap. I forgot to press record. No, I'm kidding.
Oh no.
Start all over.